The upcoming stock market meltdown. Are you prepared? This video will reveal some startling information about a potential upcoming stock market meltdown. A meltdown larger than most of us have seen in our lifetime. A meltdown that could be much worse than the 2008 financial collapse we just went through. To begin, the alarming information in this video could affect all Americans, in particular, baby boomers, those soon to retire, and current retirees. Are you familiar with the gentleman who predicted the following stock market shifts with almost scary accuracy? Japan's lost decade, the 1990 to 1992 recession here in America, the largest bull market run in America, and finally the 2008 stock market, credit, and housing crash. Well, he has now predicted an even larger crisis that he says will occur over the next 12 to 18 months. Now brace yourselves, as his prediction is outright scary. He predicts the Dow will drop down to 3,300 before it's all said and done. Now, before you turn this video off and think that this must be some kind of joke, we urge you to listen to the rest of our analysis on this. The man's name is Harry Dent, a Harvard graduate, economist, and top-selling author that has used the science of demographics to predict each and every one of the major market swings, both upwards and downwards, over the last 25 years. And before we go into more, I want to state that we do not work for or have any affiliation with Harry Dent or his company. In fact, we don't even believe everything he reports. However, this one was too much to ignore. Given his history of correct calls on the market, it's extremely tough to completely ignore Harry's predictions. For instance, what if he is just somewhat correct instead of 100% correct this time? Would the Dow Jones going to 6,000 affect you? Would it going to 9,000 affect you? Would it change the date that you expected to retire? Would it affect your 401k or any of your other retirement money? Now, most economists and traders make their calculated estimates of the future based on cycles, trends, and patterns in the market. Harry Dent makes his predictions based on cycles, in particular, demographic cycles. Now, the graph to the left is not something that many would take much notice of. However, we found it incredibly eerie that if you add up the 5-year S&P 500 returns from 2003 to 2007, you get 65.33% of total gains before 37% was erased in 2008 in a short matter of time. Now, if you add up the 4-year returns from 2009 to 2012 and then add in the same 5.49 from 2007 as an estimate for 2013, you get 65.12%. Compare that to the 65.33% before it all tanked. Now, the following year, 2014, is when Harry is predicting the wheels are going to start falling off. Now, can you guess what happened in 2002 based on this trend? In 2002, the S&P 500 lost 22%. Now, for argument's sake, let's say that Harry Dent finally does miss his first prediction in almost 30 years, and the market doesn't really fall 75% from the approximate 15,000 Dow Jones mark that it sits at today. And however, let's say that Harry is 50% correct, and the Dow Jones drops 38% to 9,300 approximately. Let's see how that will affect each and every one of you based on our age. Now, if you're between the ages of 15 and 30, a stock market correction this big will affect you the least. Based on the general population, you haven't saved too much money yet, your 401k and IRA are still in infancy stage, and your biggest obstacle will be keeping a job, as unemployment will certainly increase rapidly if the market goes down 37%. If you're between the ages of 31 and 40, a stock market correction this big will most likely have some large effects on you. Based on the general population, you are starting to get promotions at this age, you're starting a family, saving for their college, and been putting larger chunks of your 401k and pre-tax dollars into qualified plans. Now, if you're between the ages of 41 and 55, a stock market correction this big will most likely have a drastic impact on you. Based on the general population, you are beginning to hit peak earning potential. Your expenses are quite high as your children are hitting their peak expensive years, and the majority of your assets are tied into your home and retirement plans like 401ks and IRAs. Now, if you're between the ages of 56 and 65, a stock market correction this big will most likely have a devastating impact on you. Based on the general population, you have hit your peak earning potential, you have a distinct retirement age in mind, and the majority of your assets are tied in your home and your retirement plans like 401ks and IRAs. A large correction in the stock market and the housing market, similar to 2008 or worse, could completely alter your retirement dreams. Now, if you're between the ages of 66 and 80, a stock market correction this big will most likely ruin your retirement if you don't have the safeguards in place. Based on the general population, you're about to retire or you have already retired on some sort of fixed income. Most of you can't afford to lose any of your retirement dollars, let alone 38% of them. A loss that big on all of your retirement savings could mean losing your home, selling off other assets, moving in with children, or much worse. Now, although no one can predict the future or tell you exactly where you should have your retirement money at any given time, there are some very important things that you can do to protect yourself from another stock market crash. Things that you can be doing starting today. Get educated. Education is key. Speak to a retirement income specialist who focuses on income planning strategies, not ones who are trying to get you double-digit returns or knock it out of the park. Number 3, more education. Steps to get educated. Number 1, download the absolutely free report either immediately to your right or on the link below in this video description. Download as much unbiased retirement educational pieces that you can get your hands on, and of course actually read it. Write down your questions and your areas of concern with your retirement money and speak to a retirement income specialist. Make sure you have a plan in place. Without a map, you will surely get lost. Finally, if you think it's important to insure your house, your car, or even your life, then make sure to insure your retirement. We wish you the best, and don't hesitate to give us questions or post comments. We will do our very best to point you in the right direction.